Welcome back, traders. Before we dive in, hit that subscribe button and turn on notifications so you never miss these high-value trading psychology insights. Today, we're uncovering the secret daily habit that separates the average trader from those who are 10 times more profitable. This isn't theory. It's practical, actionable, and rooted in real trading behavior patterns that top professionals use every single day. Let's start with a question. Have you ever wondered why some traders seem to consistently win, while others struggle, even with the same charts, indicators, and market conditions? The difference isn't tools. It isn't luck. It's a daily behavioral habit, a subtle routine that rewires the mind for consistent decision-making and discipline, even under intense market pressure. Here's the first secret. Pro traders start their day with a mental framework that primes their brain for opportunity, not panic. Before looking at a single chart, they spend 5 to 10 minutes doing what psychologists call cognitive priming, visualizing market scenarios, rehearsing responses to losses, and anchoring their mind to rules rather than emotions. This is not just mindfulness, it's strategic rehearsal for high-stakes decisions. Imagine waking up and mentally walking through your trading day. You anticipate the volatility, plan for scenarios where your trade goes against you, and picture yourself executing your rules calmly. By the time the market opens, your nervous system is already familiar with fear, greed, and impulsive pressure. It's been rehearsed. This is the first layer of the secret habit. Next comes journaling with purpose. Professional traders don't just write numbers. They record why they made each decision, the emotional state they were in, and what triggers influenced them. This isn't optional. It's a daily habit that trains the brain to identify patterns in behavior, not just market data. When you journal consistently, you start noticing your own psychological weaknesses before the market exposes them. Here's a powerful real-world example. Imagine a trader journaling a losing trade. Instead of just marking the loss, they note, felt sudden urge to exit at 3 seconds into a red candle spike. Heart raced. Jumped before strategy allowed. This insight allows them to preempt the same mistake in future trades. By converting raw emotional experience into structured data, the trader builds a mental autopilot that operates above panic. Another secret is the pre-market mental checklist. Pro traders review setups, potential risk, and daily market themes before opening their platform. They ask themselves, what am I prepared to risk today? Where are my blind spots? Which patterns will I ignore, and which will I focus on? This habit prevents the mind from being hijacked by noise the moment the first candle forms. Let's talk about behavioral micro-routines during the trading day. Top traders integrate small, repeatable actions every hour. A deep breath before entering a trade, a 30-second check of emotional state, and a micro-review of positions. This is not random discipline. It's a neuroscience-backed method to maintain decision clarity under pressure. These micro-routines allow them to act based on rules, not impulses, which is why they achieve higher win ratios and more consistent profits. Another layer is mental debriefs midday. After major market moves, professional traders take 2 to 3 minutes to reflect. Did I stick to my plan? Did fear or greed influence any decision? Did I notice my emotional triggers? By inserting this pause, they prevent cumulative emotional fatigue, which is the silent killer of most retail traders. Pro traders also employ trigger anchoring, a habit that sounds simple but is incredibly powerful. They attach specific actions to market events. A green candle at resistance, microbreath, price hitting stop loss, quick emotional reset, news announcement, rule check before reacting. By consistently anchoring behavior to market triggers, their brain forms automatic responses that bypass panic and overthinking. Here's a critical secret most traders overlook: the integration of physical and mental habits. Professionals don't just train their mind, they train their body to signal calm. Hands relaxed on keyboard, shoulders dropped, eyes scanning multiple levels without tension. Over time, the body itself becomes a stabilizer for decision-making, reducing impulsive clicks driven by adrenaline. Another unique daily habit is pre-scheduled mental exposure. Pros deliberately simulate stressful scenarios with historical charts or live paper trading, exposing themselves to market shocks in a safe environment. This trains the brain to tolerate stress, reinforcing calmness in real trades. Essentially, they hack their emotional response system, so when the real market acts unpredictably, the mind stays grounded. Let's explore behavioral timing routines. Professionals segment their day into cognitive blocks: pre-market focus, active trading, midday reflection, and post-market debrief. Each block has explicit actions tied to decision-making, journaling, and emotional regulation. This routine is the backbone of the 10x profitability secret. It ensures consistency in performance, regardless of market volatility. Post-trade reflection is where magic compounds. Traders review decisions not just by outcome, but by process adherence. They ask, did I follow my rules? Did I notice early fear cues? Did I act within my predefined risk parameters? This habit, repeated daily, strengthens neural pathways for disciplined responses and gradually rewires the brain to respond to market stress with precision, not panic. Let's add a practical example of implementation. Before market opens, spend 10 minutes visualizing 3 worst-case scenarios. Write down exact responses for each. Set a micro-routine: breathe, check emotion, review stop-loss, execute. At midday, pause 2 minutes to evaluate if your behavior aligned with your plan. At market close, journal emotions, triggers, and outcomes. Repeat daily. This is the habit that multiplies profitability, not some indicator or secret signal. Another subtle but crucial habit is anticipatory pattern recognition. Traders train to detect emotional signals in themselves: microtension in shoulders, shallow breathing, rapid eye movement, or impulse to click too fast. By recognizing these internal cues, they prevent emotional hijack before it turns into a mistake. Over months, this creates a self-monitoring system that operates subconsciously. Pro traders also integrate mental resets between trades. They avoid back-to-back impulsive actions. 30 seconds of stretching, looking away from charts, or micromeditation allows cognitive reset. These pauses are micro-habits that protect consistency and prevent cumulative errors, the silent killer of profits. And finally, the biggest insight: consistency beats intensity. You don't need a superhuman streak of perfect trades. What multiplies profits is daily adherence to mental routines and behavioral patterns. Visualization, journaling, micro-routines, trigger anchoring, emotional resets, all combined into a disciplined daily structure, creates the compounding effect that makes some traders 10x more profitable than others. Remember, these habits aren't optional. They're the difference between reacting impulsively to market swings and executing trades with calm, rational precision. The good news: they can be learned, practiced, and optimized. If you found this valuable, make sure to like this video, comment your own daily trading habits, subscribe, and explore our other videos where we dive deeper into trading mindset, behavioral hacks, and professional routines. Master these habits, integrate them daily, and start seeing real, measurable improvement in your trading performance.